All right, listen up. It's Wednesday, June 11th, 2025, and the global markets are a whirlwind of action. You can't just sit on the sidelines and hope for the best. No, sir. You need to be in the game. You need to understand the playing field, and you need to be ready to make your move. This week is a pressure cooker. We've got stocks chugging along, we've got crucial inflation numbers on deck from the US, and we've got the two biggest economies in the world, the US and China, sitting down at the table. Money never sleeps, and right now, it's sprinting. You need to know where it's going. This isn't a time for guesswork, it's a time for homework. Every single piece of news, every data point, every whisper from a central banker is a clue. Are you paying attention? Because the market is a complex machine with a million moving parts. We're seeing strength overseas, which is a great sign, but everyone here at home is holding their breath. They're waiting for those inflation numbers like it's the season finale of their favorite show. What the Federal Reserve does next hangs in the balance. And that, my friends, affects every single stock in your portfolio. So grab your notebook because class is in session. Let me be clear, opportunity is knocking, but it's not knocking for the timid. It's for the informed, the prepared, the bold. You have to connect the dots between what's happening in the bond market, the price of oil, and the latest chatter about trade tariffs. It's all one big, interconnected story. Ignoring one chapter means you won't understand the ending. This week is pivotal. The decisions made in Washington and Beijing, the numbers that flash across the screen, they will set the tone for the rest of the month, maybe even the rest of the summer. Are you ready? So what's the bottom line? The bottom line is that you can't afford to be lazy. You have to be a detective in this market. Look at the evidence. We have a global rally trying to find its legs, but it's walking on a tightrope. One bad inflation report, one sour headline from the trade talks, and whoosh! Things could get rocky. But on the flip side, good news could light a fire under this thing. That's why we do the work. We prepare for every scenario. Now let's dig into the specifics. Booyah! Let's take a trip around the world, shall we? Over in Europe, the bulls are running. The DAX in Germany, strong. The CAC 40 in France, looking good. These markets are feeding off a wave of optimism. They're not waiting around for the US to make up its mind. They see signs of economic stability, and they're buying. This isn't just a flash in the pan, it's a broad-based move that shows confidence is returning to the continent. Investors there believe the worst of the inflation fight is behind them, and they are putting their capital to work in industrial giants and luxury brands. It's a beautiful thing to see. Now let's fly over to Asia. The story there is just as compelling. The Nikkei in Japan has been a powerhouse, and markets in Shanghai and Hong Kong are showing some serious resilience. Why? Because the chatter is getting louder. The United States and China are finally talking trade again. Forget the noise and the political posturing. When these two giants talk, the market listens. The possibility of easing tensions and rolling back some tariffs is like a shot of adrenaline for Asian equities, which are heavily dependent on global trade. This is a classic case of buying the rumor. But here's the rub. While the rest of the world parties, Wall Street is pacing the floor. American investors are laser-focused on one thing, and one thing only: the upcoming Consumer Price Index report. This is the big one. This number will tell us if inflation is truly cooling down, or if it's a stubborn beast that just won't quit. Everything the Federal Reserve does next, whether they pause, cut, or heaven forbid hike interest rates, depends on this data. The entire market is in a holding pattern waiting for that number to drop. So you have this fascinating divergence. Europe and Asia are looking ahead with hope, fueled by local factors and the prospect of better US-China relations. Meanwhile, the US market is stuck in the present, paralyzed by the fear and anticipation of a single economic report. This tension is what makes the market so exciting. It tells you that there are different stories playing out all over the world. You need to know which story you're investing in. Don't just follow the herd. Understand the fundamental drivers behind the moves. All right, let's talk about the Wild West of finance, the crypto markets. Bitcoin, the kingpin, has been on a roller coaster this week, which is no surprise to anyone who's been in this game. It's been dancing around a key psychological level, trying to find its footing. There's a tug of war happening between the bulls, who see institutional adoption and a flight to digital safety, and the bears, who are worried about regulatory crackdowns and the impact of high interest rates on speculative assets. Bitcoin's price is a fever chart for market risk appetite. When investors feel brave, they buy. When they get scared, they run for the hills. Now let's move from digital gold to the real thing. Gold, the classic safe haven asset, is holding steady. It's like the market's insurance policy. With so much uncertainty around inflation and what the central banks might do, investors are keeping some powder dry in gold. It's not screaming higher, but it's not falling apart either. It's just sitting there, providing stability in portfolios. Think of it as the steady veteran on a team of flashy rookies. It's not going to give you explosive gains overnight, but it's there to protect you when things get messy. A little gold is never a bad idea. And what about black gold? I'm talking about oil. Crude prices have been climbing, folks. Pay attention to this. Why? 2 words: supply and demand. On the demand side, you have signs of a stronger global economy, especially with China potentially getting back on track. More economic activity means more demand for energy. On the supply side, OPEC and its allies are keeping a tight leash on production. They don't want to flood the market and crash prices. This combination of rising demand and controlled supply is a powerful recipe for higher oil prices, which feeds right back into those inflation numbers we're all worried about. So what's the takeaway here? These markets are sending you signals. Bitcoin's volatility tells you that speculation is still alive but cautious. Gold's stability tells you that fear is still present under the surface. And rising oil prices tell you that the inflation fight is far from over. These aren't just numbers on a screen, they are vital pieces of the puzzle. Understanding the commodities and crypto markets gives you a richer, fuller picture of the entire financial landscape. You can't just be a stock picker, you have to be a market master. Let's get to the most important market that nobody on Main Street watches: the bond market. The smart money lives here. This week we're seeing US Treasury yields ticking up slightly. What does that mean in plain English? It means the bond market is getting nervous about inflation. When yields go up, it means bond prices are going down, as investors demand a higher return to compensate for the risk that inflation will eat away at their profits. The bond market is basically telling the Federal Reserve, we're not so sure you've got this inflation thing beat just yet. You have to watch the 10-year Treasury yield, it's the North Star. So let's wrap this all up. What are the big, flashing red lights you need to watch for this week? First, a surprise in the US inflation data. If that number comes in hotter than expected, look out below. The market will throw a tantrum, fearing more rate hikes. If it comes in cooler, we could see a massive relief rally. Booyah! This is the single biggest catalyst on the calendar, bar none. Everything else is secondary to this report right now. Don't get caught on the wrong side of it. Second, you have to keep one ear glued to any news coming out of the US-China trade talks. A positive headline, a hint of a deal, or the removal of some tariffs could send global markets soaring, especially in the tech and industrial sectors. On the other hand, if the talks break down or if new threats are made, it could pour ice-cold water on this rally. This is a major source of potential volatility, a real wild card that could change the entire market sentiment in a heartbeat. Be prepared for headlines to move your stocks. Finally, don't take your eye off the price of oil. Geopolitical flare-ups or unexpected cuts to supply could send crude prices spiraling higher, complicating the inflation picture and putting pressure on consumers and businesses alike. This is the sneaky risk, the one that can creep up on you when you're focused on everything else. So what's your homework? Know what you own? Understand the risks. Watch the inflation data, the trade news, and the price of oil. Stay informed, stay nimble, and don't ever let them see you sweat. There's always a bull market somewhere.